Alright guys, hey, hope this video finds you great. Hope it finds you well. This one's going to be slightly different for you guys. We're not actually going to be looking at the portfolio tracker at all today, or the Fidelity Investments webpage, or Cardone Capital webpage, or anything like that. What I want to do is actually use good old-fashioned PowerPoint, and hopefully you guys' eyes aren't already glossing over. Hopefully this is a little bit more entertaining for you guys. Uh, than what I've done in the past. But what I really want to talk about is my investing strategy. And I'm not just going to be like talking through it with respect to just words, but I'm also going to be showing you figures on the screen that might help you understand how my mind does work and how the actual cash flows are being generated through the portfolio and being distributed amongst different accounts. So you can see on the screen here that we already have in the upper left hand corner income streams. In gray, a little bit to the right of it, we have stale accounts. We have in red all the way to the right monthly contributions. So those are the accounts that I'm attributing and contributing to on a monthly basis. And then you have in green just the normal investing accounts that I generally will add money to every once in a while. And so obviously the stale accounts are stuff that have kind of fallen off of the bandwagon. I haven't really been keeping up with them, and so you'll kind of see that throughout once we kind of get into it. So but before I jump into this, I actually wanted to say, so what I'm going to do is I'm going to do this as a public video, but then I'm also going to be doing a specific video where I give percentages and I actually give the dollar amount of money that I'm expecting to move into all these different portfolios, as you see here on our investing stock course that we have on our website that me and Kyle have. So if you guys are interested in seeing actual dollar values and percentages going into each of these accounts, we'll do that as well. And at the very end, if you guys stick around for that, you'll see my ideal investing strategy, where I basically will have what I have now plus what I will do and hopefully build over the next 2 or 3 years, maybe even longer than that. But what I envision my long-term investing strategy looking like, and what it would be if I had, let's say, all the money in the world, all the time in the world, and all the abilities to have different businesses, and what that would actually look like as a structure. So stay around for the very end for that. Now, jumping actually into what we actually have here, we have my actual W-2 income, which is being a petroleum engineer. And right off the bat, most of that money goes into a checking account, but you also have a portion of that in the actual 401k. And I talk about it in some other videos, but if you guys are interested in learning a little bit more about how much I actually get in that the portion of the portfolio, check that out in the investing course that we have. And you also have personal savings as well. So I get into how much I will be actually putting into the personal savings in the investing course as well. And with that, some of that personal savings goes into the checking account every once in a while. That's just because if I ever need any money or spend too much for a specific month, I might need to catch up. But I generally keep, a couple paychecks or so in the personal savings, and I'm actually going to continue to try to grow that personal savings throughout all of 2020 as well. Another income stream that I have is YouTube. You guys are very familiar with that. You're watching me on YouTube as we speak. And basically that money just goes into my checking account every time it gets above $100. It's typical for YouTube income. And that automatically will go into a YouTube Moolah portfolio. All the money I make from YouTube goes directly into the checking, goes directly into the YouTube Moolah portfolio. There's no money that actually gets spent from the YouTube income, although I do have to pay taxes on that now, which I'm generally just going to say I'll eat through all the other income streams that I'm generally making. There's the Roth IRA, which generally speaking gets funded with my personal savings. And so just like we will have early this month in January of 2020, I have a decent amount of money sitting in the personal savings. I'll move that over into my Roth IRA. And actually, I have to do a backdoor IRA due to income reasons. But if you guys aren't familiar with that, I'll try to make a video or send you guys a video describing that on, in the upper right hand corner there. Then actually moving into stuff that I contribute to on a monthly basis. So this is like where majority of my capital sits, about 150,000 or so at the moment. This is where I keep a lot of my energy investments, a lot of my AT&Ts, my main contributions and my main portion of my portfolio that I talk about, the 5,000, almost $6,000 in dividends that entered the portfolio in 2019 came from the individual brokerage account. And so that's the majority of it. I'll give you guys this. I generally try to add about 1,500 a month into the individual brokerage account on the 15th of every month. That's just because, I get a decent amount as my job, a decent amount from YouTube, and I feel comfortable being able to add that 1,500 a month. So that is, just on top of what I've already contributed to, say, the Roth IRA, or the 401k, and goes into personal savings as well. So those are the key things that I do with the individual brokerage account. There's another account that I fund every single month now, which is Fundrise. That's relatively recent. I generally try to add a few dollars to this one to try to get the portfolio up to about $100,000 or so over the next couple years. And that's just to also diversify outside of a brokerage account, outside of a Roth IRA, outside of a YouTube Moolah portfolio, outside of a 401k. Um, because obviously, if you just rely strictly on, say, individual securities, there might be a downfall in that, and owning physical real estate in something like Fundrise might be somewhat beneficial and offset some potential losses, or paper losses rather, if you were to be investing in individual securities, and then you still get the cash flow coming from Fundrise as well. So then there's M1 Finance. I wanted to diversify out of the typical Fidelity brokerage accounts, which I have no problem with Fidelity. It's just that it's getting to the point now where I've up to the 150 or so $1,000 range with one of my accounts, and I was trying to figure out what I can do outside of Fidelity. Part of me is thinking about the 250,000 or so federal insurance rate that everyone has, the FDIC, just in case, any of these individual companies go bankrupt like Fidelity. I'll be insured up to 250,000 if the company goes bankrupt, but not anything above that. So part of me is trying to understand and trying to diversify outside of specifically Fidelity for, let's say, my brokerage account, Roth IRA, to the point where if my brokerage account gets above 250,000, maybe I should be inputting all my money into, say, M1 Finance, so that way I have two different accounts that potentially are insured up to 250,000, and instead of having one account, maybe having $500,000, let's say, and losing that 250,000 once it goes above that insurance limit, if that makes sense. So that's the reason why I'm kind of trying to diversify out of specifically Fidelity for an individual brokerage account. But also, that being said, everyone really likes M1 Finance, and I honestly just wanted to give it a try. So there's really two reasons why I do the monthly contributions to M1 Finance. And if you're really curious how much I'm contributing to M1 Finance and Fundrise, I talk about that on the course as well. Then there's obviously Cardone Capital. So that's, a $15,000 investment. I think people have seen that at this point. And that just goes directly into the checking account. There's no reinvestment that I can do into Cardone Capital. So unfortunately, at this time, it all just kind of goes into the checking account and either goes into where any of these green arrows kind of points to. So the individual brokerage account, Fundrise, M1 Finance, or maybe some of these other ones that you'll see in just a second. There's also Shopify, which is something I'm really getting into, trying to understand whether or not I can potentially do drop shipping. But at the moment, what we're working on is me and Kyle from Passive Income Investor are really trying to start a Shopify store, really try to add value and teach you guys and provide value to you guys to understand and re-educate folks on financial education, which is, generally speaking, in the media and things along those lines, just utilized as headlines to feed ad revenue. And for me, I'd rather just feed you guys true information that you guys can learn about and not try to scare you about, oh my God, the market's hitting all time highs, or oh my God, the market's crashing. Actually educate you in the long term portfolio management aspect of financial education so you guys can look through the noise, look past the macroeconomic trends, and make appropriate decisions for your better financial future. So that's the goal with Shopify, and that kind of goes hand in hand with the YouTube at the moment. The YouTube ad revenue at the moment, those kind of feed directly off of each other. But like I said, in Shopify, it could lead to other things like drop shipping, which is something I've looked at, eBay, which is something I looked at with some of my friends as well. So we will see how online revenue, which is maybe what I would like to rename this Shopify part 2 as online revenue or online businesses in the future. What Shopify at this point could kind of evolve into. At the moment, it's relatively small, less than 1,000 a month, but I could easily see this growing into 1,000, maybe 2,000 a month, relatively quickly, maybe in 2020. So we will see what happens with that. Then, if you roll into some other accounts that I fund a little bit less frequently, which is why it's a gray line rather than a green line, you have Computershares. That's something where if I have, a few positions, it was beneficial in the past because you used to be able to invest at either very low commission rates or no commission rates. So for Exxon, for example, I don't have to pay any commissions, and I haven't had to when I initiated the position in 2015. And there's a couple other companies in there as well that I was able to purchase at, say, $50 a month, $100 a month, purchase partial shares, and also pay little to no commission all the way since when I started investing in Computershares back in late 2013, early 2014. So it was way ahead of its time with respect to not having to adhere to the whole shares and having to pay massive commissions. Granted, there were some positions on here, like Altria Group, that you would have to pay $2.50 for commissions, which at the time when I first started in 2014 was beneficial because I think when I started in 2013, 2014, commissions were like $15 a trade, and they had just moved down to $9.95 a trade. So that being said, back then it was extremely advantageous to have a Computershares account for me to build, especially because I was looking at adding 100 or $50 a month. Because back then, 50 to $100 a month was a lot of money to me, and I wasn't moving money like I am now with potentially $10,000, $15,000 deals like I have, let's say, in 2019 timeframe. So that's why it's gray. I still utilize it. It's not that I don't utilize it. I purchased, a bunch of Exxon shares in 2019, twice, I believe, so two tranches. So that being said, it's not that, I don't fund it. It's just that, it's almost easier to contribute to the individual brokerage account. But it's definitely something when I see something cheap like Exxon over the past couple of months, I will utilize it. Then there's the share owner services. I don't utilize this nearly as much as I should, but it's something that I would like to kind of do as well, build myself a $50 position or so in things like General Mills, which is in there. And a couple other smaller companies that I kind of built. And that being said, Computershares and share owner services have kind of been replaced by M1 Finance in that respect. So both were kind of looking at that commission-free, very little amount for fees or anything like that, and that's kind of been replaced by the M1 Finance. And M1 Finance kind of blew up because of these reasons that were previously utilized by Computershares and share owner services, meaning the partial shares and the no commissions. But M1 Finance obviously had the advertising and the marketing, and obviously had the tech and user interface as well. So it kind of made these Computershares and share owner services obsolete. So at the moment, that one is also sitting gray. Then there's one other thing. I have the share value package, which I get through work, which I think is hugely beneficial for me to be able to work. And every couple of years, they'll throw me some shares that I have to vest over 2 to 3 years before I actually get them. And then they eventually roll into my individual brokerage account. But but yeah, and sometimes I sell them to purchase other things because obviously energy is a massive portion of my portfolio at the moment. But sometimes I keep them as well. Um, and then there's obviously the stale accounts. So there's Robinhood, Lending Club. I don't really have much in Robinhood and Lending Club, so I think less than $50 for each of them. So nothing too crazy for those accounts. And yeah, I mean, that's really all that should be said about those sorts of things. Um, but yeah, I think that's relatively it. Like I said, if you guys are really interested in anything, uh, that that would be, if you guys are really interested in anything else and you really want to see how much dollar values are going through each of these green arrows, make sure to think about purchasing the e-course that we have. I talk a little bit more about it, but it's relatively interesting. But we're not done because there's still the ideal investing strategy that I want to talk about, and it's not perfect either, but it kind of gets you an idea, and I talk through this a little bit more as well in the course. I'm not going to walk through it step by step, but you can see that with my petroleum engineering income, still going to do my 401k personal savings. But one of the branches that kind of comes off the personal savings is, yes, it'll probably still go into a Roth IRA, but also physical real estate. And with physical real estate, I have to have a tax account that you can kind of see down here at the bottom. Still have the YouTube income, Cardone Capital income, the Shopify income, but hopefully there's the other income bubble here that it's called franchises and other businesses. And with that, obviously, you'll have the tax accounts as well. And there's probably subsets underneath this. So obviously, the most developed of these income streams is like my stock portfolio income. But one of the things that I want to talk about with you guys in the future, and I might actually do this for the e-course as well, is talk about especially how much I want to come from, say, my normal W-2 income, my Shopify income or online business income, my YouTube income, and my franchises, other businesses income. I generally speaking, when I talk about this, have like 4 to 5 pillars. And so with those 4 to 5 pillars, I kind of talk about where where I want all my income to come by. And it's not necessarily about a cash value position. Um, let's say, you know, 10% of cash or something like that. It's more along the lines of how much value is coming from it. So if you get cash flow from, let's say, cash, or cash flow from my franchises or other businesses, or cash flow from my online businesses, which you could probably roll in YouTube and Shopify or eBay into those online business category, how much income is coming from those is more important to me than the actual value, because income is what really pays the bills for me. And so I think everyone kind of recognizes that that kind of is where my head is at in terms of, how I want to structure my portfolio. But one of the key things that you can acknowledge here, like I said, it goes back to cash flow and eliminating levers. And if I kind of go back to this, you can see that everything kind of goes into a checking account, and I pay my bills out of my checking account currently. But there's nothing to say that I can't really transfer that into an individual brokerage account. Fidelity allows you to pay bills from your individual brokerage account. So it's almost like leaving my checking account obsolete. And to be 100% honest, my checking account pays almost negligible interest, whereas my individual brokerage account is in a money market account, and at the moment pays me about 1.7% annual. And so that doesn't mean millions of dollars, right? But what it means is I almost eliminate a step in terms of all my money going into my individual brokerage account immediately, and I distribute my money from my individual brokerage account rather than, and that's where the majority of my money goes, is in the individual brokerage account at the moment. So all my money would go automatically into where I have the majority of my account and the majority of my money and the majority of my funds. And also a lot of my dividends would be coming into my individual brokerage account, which would help potentially pay bills as well in the long term. Another thing to keep in mind is, now that I have all my money, say, potentially going to my individual brokerage account, am I going to be able to withdraw money if I were to say be traveling or something like that? And I believe the answer to that is yes. Fidelity obviously has debit cards and stuff as well, so that wouldn't be a problem. But I think what this does is it almost eliminates a step, and it also streamlines the business. And streamlines how many different accounts I have, and I believe it's a little bit more difficult to get into Fidelity. But what it does do is it opens the window for individual brokerage account to be kind of susceptible to, let's say, a debit card being hacked or something like that. So that's something also to consider as well. But we will see. This is kind of a work in progress, but at the moment, this is kind of my ideal strategy. But like I said, if you're interested in knowing a little bit more about how I want to do this in the future, check out the e-course, check out passiveincomeForDummies.com, and let us know what you're thinking. Communicate with us in the comment section down below, and we'll be more than happy to talk to you about this stuff. But really hope you appreciated this investing strategy that I kind of have for 2020. Definitely am about to redo this video that has actual percentages, dollar values for folks to see. Really excited to do this one. I thought it was really cool to kind of put together and visualize it. I've kind of done it on paper before, but I didn't think it was extremely, I guess, coherent. So this is probably the best that I've kind of done it at the moment. And of course, I might have forgotten an account or two, but this is the gist of it, guys. And so really hope that this helps provide some value and helps you kind of understand and think on your own case where you potentially might be having your bottlenecks, or where you can help, I guess, expand your own investing and contributions throughout your portfolio. So hope this video finds you great, hope it finds you well, and I'll see you guys on the next one. Cheers.